Peace. This is Brother Polite for yet another installment of Gold in the Crisis. You know, we keep this thing going from one weekend to the next. I'm coming off a doubleheader, a back-to-back class weekend, as we did the first session for real estate and UCC. So it was a great class. UCC and real estate was an amazing class. I love it. And today, we back at it again. Today's lesson is entitled Supreme Mathematics. It's part 2, the golden mean ratio. Let's get into it. Now, first and foremost, I want everybody to keep their eyes on Sorrento, S-R-N-E. I brought this up over a month ago when it was $2.17. And I told everybody, I was live. Many of you know, I went live and I'm like, Sorrento, let's go get it. And they went as high as $10. We watched that thing go all the way up. At that time, I didn't come out with the class, How Good Is Your Pullout Game? And what I realized is that we didn't realize how to hedge our risk or leave with at least our principal, the amount we put in, maybe a little more profit. And if we still confide in the stock, you will leave the rest of the shares there. You don't have to go flush. I bought 100 shares, I sell 100 shares. You can come up with strategies. So some of you lost profit, but still maintained profit. Most of you maintained profit, but as it started going down, you was just hoping that $10 would come back, because some of you got in there around $6. Some of you got in there around $5. Some of you got in there around $4. You know, I had bought a couple thousand shares at $2.17. And so it was great. And, you know, I had my sell stop limit loss at $9. But remember, the way I teach from the middle of the book. Because if I would have waited to get you guys to this point, you would have never traded until probably 2-3 weeks ago. So my thing is to get you to walk into the movie theater 20-30 minutes late, and provided it's a real good film, you'll be like, man, I can't wait to go to the beginning of this movie and see what I missed. And you'll be more attentive in the first 20 to 30 minutes. So you lose people's attention when they come in and say, hey, I want to make money and I want to make money ASAP. And you say, okay, but wait, grasshopper, just wax on, wax off for like a good month or so. So I have to modify that approach towards teaching so I can keep everybody engaged. But nonetheless, we have arrived, we're here. A lot of you have made money already. And I'm just telling you, if you sat in there because you confided in the fact that Sorrento was worth money, I mean, I left, got some money out of it. I kept some in there. But I got me a profit because I know, okay, things are, you know, I didn't want to hold up all the money. I made so much money from Sorrento. Let's give me some of my money. I'll leave something in there. And if I come back around the way, I don't mind if I pay a little bit more. Because if Sorrento does what I conceive it to do, then we're in good hands. And in fact, when Monday comes, probably in the pre-market, depending on the energy, when Monday comes, I'm going in there again. And I may buy enough to sell some, depending on the energy, but I'm gonna keep stockpiling. I buy enough to make enough profit so my profit made can establish my position. So I take the difference. And in doing so, the stock paid for itself and gave me my money back so I could do the same thing elsewhere. So it's all about strategy. You got to do the math. And that's what we're dealing with. We're dealing with supreme mathematics here. You got to do the math. But remember, our 3 C's, common sense tells us to pay attention to current events, and current events that we're interested in tells us to calculate. So we deal with common sense, current events, and calculation. I like Sorrento because I'm not pro-vaccine. And Sorrento Therapeutics has a non-vaccine approach towards curing COVID-19. We also know, because in previous classes I told you, get those FDA calendars. Sorrento has about 4 or 5 things lined up on the FDA calendar. Phase 1, phase 2, being reviewed. Some processes being expedited. Sorrento gonna mess around and get all 5 things approved. And that stock gonna jump. Should that happen, we'll be real happy or real upset with ourselves. Because this is my second run around. The last time I told y'all about Sorrento, which was the first time I told you guys about Sorrento, which is authentic, nowhere else on the internet. That was due to my stock screening strategy that I found Sorrento so early. I see some powerful developments. So I've just got my eyes on them. I have my eyes on them so much. When Monday comes, I'm just see if the stock go down or up a little. I'm gonna buy in. They got my attention. I'm gonna buy in. Buy about 500 shares. I already got some. And I'm gonna play the game. Because whoever get that cure for COVID-19, and if there is a cure for COVID-19 on the vaccine end, we still got these boys over here doing the non-vaccine cure. How many people will buy into a non-vaccine cure? People are waking up every day. A lot of people don't want to deal with that no more. The most ignorant male and woman is like, I don't want no vaccines. I think the government trying to do something to us. I think this whole thing's a setup. People waking up, people feeling like that. So who better to come with the cure than the non-vaccine company? Woo! That's why I like them. Because they hit big. And you still can invest in them other places. That's why I like these guys so much. I don't give a damn about their lawsuits. Anyone can be sued. I don't care about that. Well, yes, I do. I care about it. But, you know, Sorrento got their hands dirty. But I like their CEO. He goes on the news. He talks that talk. He pushes action. If anything, man, if he's capping, at least he's going to make me some money along the way. So keep an eye on Sorrento Therapeutics. Keep a strong eye on them. Next week, I actually have a loaded class for you, very loaded. But today, let's move forward. I'll be already into next week. That's the way I got to be in order to keep up with all these different classes, keep them authentic, and also to make sure it's quality. That's what we pushing. We pushing quality, not quantity. We just happen to be winning on both ends, quantity and quality. Supreme Mathematics, Sacred Geometry. This is class 2, the golden mean ratio. Candlesticks control the narrative. We've been through this. Candlesticks tell us the behavior of buyers and sellers, profit and or new positions, enter and exit strategies. I just want to go over these things. I'm going to run through these because you had these in the previous class. But it's always good to review things because it's recurring. I got you coming to class every weekend. Some things you should see a little more often because I want you to just see it and be able to identify it. We're learning a new language, people. We're learning a new language, so walk with me. This ain't about filling up slides. I don't give you fluff. I'll run through it, but it's important because I also tell newcomers, whatever the newest class is, check that first, then go up to the top class. That's the way to study. Let's see what's going on Sunday. Don't start from the beginning. Start from the very last class, whatever that may be, and get excited about what's going on. Realize you don't understand what the heck just was happening. And for the rest of you, realize I'm really starting to get it. That second time around, it really clicked. So I'll go through these, and then we'll proceed to go through the rest of the class. So candlesticks control the narrative, the behavior of buyers and sellers, profit and or new positions, and enter and exit strategies. Bulls thrust its horns in the air, uptrend. Bears, swipers pause downward. Prices on decline. So bears go downward, bulls go upward. So if it's a bullish assumption or a bearish assumption, that means you presume, or pardon me, that means you assume that the price is going to go down or it's going to go up. If it's a bull market, if it is a bear market, then that means what? The market is uptrending or downtrending, okay? So the bullish candle is green, the bearish candle is red. Each candle represents price action. Understand that this is a different section, so I treat each section like we just learning something. Again, I got to recap, because when I do what I do in the section, there's no looking back. Okay, each candle represents a price action. A fully formed candle represents the duration of time that corresponds with the theme of the chart, i.e. a fully formed candle in 5-minute charts represents 5 minutes. And in fact, any candle that you see in the chart, if it's a 5-minute chart, represents 5 minutes. If it's a 1-day chart, then every candle represents 1 day, and so forth and so on. So now you have wicks and the doji. Now the doji candles, let's go over here. That means they open and close. Prices are near identical. So there's not enough difference between the price it opened at and closed at within that 1 minute, within that 5 minutes, within that 30 minutes, within that day. There's not enough activity to establish itself as a body constituting a candle. So then it becomes a doji. And these are dojis. Okay? On the bullish candle, the opening is down here, the close is up here. On the bearish candle, the opening is up here and the closing is down here. So now, let's get into the work. Let's get into the work. Candlestick patterns. Patterns denote probabilities. It's the first thing I want you to understand. Patterns denote probabilities. We're mathematicians, people. That's what we're dealing with. We're dealing with science, which means to know. Science. So we look at this. This is the hammer candle. It's birthed from a decline in price. So when prices start to decline, these guys, they tend to pop up out of nowhere. Trades lower than its opening, but makes a comeback in proximity to opening price. So remember, I showed you where the opening is, where the closing is. Where the closing is, where the opening is. Complete opposite between the bearish candle and the bullish candle. So this gives us optimism, in other words. Because when we look at it, we can say to ourselves, the buyers are picking up momentum possibly. So we see this resistance and we see this momentum, but at the same rate, as far as seller to buyer ratio, would it open that and would it close that? It's not that big a difference, but we've recaptured our presence as the buyer. That's what this hammer candle is doing. So I want to read patterns because this is all about language. So we got to see these shapes and ask, what are these shapes communicating to us? What are these combinations? What are these patterns telling us? It's a language. So if you look at this like a language, you'll realize it's telling you something. If you look at it as shapes separate from language, you'll be attempting to commit everything to memory with too much pressure. The reason why it's so hard to learn other languages is because people don't use them or speak to other people when it's time to learn. They attempt to commit everything to memory. You need to make it applicable. You need to speak back. So when you see these shapes, say what it's doing or respond to what it's telling you. Get used to communicating. Get used to the communication. So when I see a downtrend, and then I see a hammer, I'm led to believe that it's a high, not believe, pardon me. I get the probability. I have this probability that, I'll say this, there's a high probability that if I'm on a downtrend and I see this hammer, I'm likely to figure there's going to be a change in direction, a reversal even. And at the very least, a retracement, which we went over last week. That's why these words were very important that I talked about last week. So this is coming in and establishing a pivot at that. So it's establishing a pivot. It's coming off a downward trend. It's a hammer candle. So this combination tells me, get prepared for a reversal. That's how I'm feeling. Hammer candle, people. It's our focal point right now. So what if the hammer candle, what if the hammer candle is inverted? Relatively similar results. More likely a retracement than a reversal. Maybe a mild spike, but definite optimism. So we're gonna see just about the same thing. Just a slight contrast. So it intimates retracement or perpetuates an uptrend. Okay? So let's move forward. It's getting interesting. Keep these things in mind, because remember, patterns denote probabilities. Patterns denote probabilities. Let's really get into this. Now I want to talk to you about what is the golden mean ratio. This thing has been used to build pyramids. It follows that science. Your ear follows this science. It is identified by the Greek letter phi, or phi, also known as the divine proportion. It's an irrational number considered at 1.618. It is consistent in music, art, architecture, nature, and geometry. And of course, this class is sacred geometry. The golden mean ratio. In the book, I taught them how to buy $1 with a few pennies. The section that I get busy in when I bring this stuff up is called the Medu Neter, ancient Egyptian hieroglyphic language. The Medu Neter. And what does Medu Neter mean? Or some say Medu Neter. It means divine language. It means sacred language. So we're using this divine proportion, the golden mean ratio, to be able to interpret the communication that's being transmitted to us by way of shapes, patterns, arrangements, motifs, algorithms. See, if you're in this class and you're in the real estate or legal fiction class, your brain gonna be on swole. Cause we talking about coding over there. We talking about algorithms over here. Motifs, recurring themes, patterns, language. This is a language based on mathematics, so it's a divine language. That's why I named that section and I taught them how to buy $1 with a few pennies. Medu Neter. Because we're dealing with something of divine proportions. The golden mean ratio at 1.618. Run on. Logarithmic spiral series. The Fibonacci sequence in nature is given by the number of petals of flowers. Most have 3, like lilies and irises, 5, parnassia, rose hips, or 8, cosmea, or 13, some daisies, 21, hickory, 34, 55, 89, S.A.R.S. S.A.R.S, pardon me. Okay. So what is this that we're talking about? What are we talking about? Logarithmic is an adjective of, relating to, or expressed in terms of logarithms. Of a scale constructed so that successive points along an axis or graduations that are an equal distance apart represent values that are in an equal ratio. Of a curve forming a straight line when plotted on a logarithmic scale, exponential. Huh? I get it. But what we're saying is, if you keep adding the previous two numbers to scale, you'll get the next number that comes after it. And for some reason, that creates a spiral that's consistent when you scale it. So let's go forward. It's just interesting that nature does this automatically. So here goes the logarithmic spiral. And each of the last two numbers, like 8 plus 13 equals 21. But 21 plus 13 equals 34. But 34 plus 21 equals 55. Fibonacci sequence. The Fibonacci sequence is the series of numbers 0, 1, 1, 2, 3, 5, 8, 13, 21, 34. Each number is the sum of the previous two. So 0 plus 1 is 1, 1 plus 1 is 2, 2 plus 3 is 5, 3 plus 5 is 8, 8 plus 5 is 13, 13 plus 8 is 21, 21 plus 13 is 34. You can look at shells, daisies, bees, whatever it is you're looking at in nature. For some reason, the numbers add up like this, whether you count their petals, their buds, you just look. Every time you go through a different layer, it's following this Fibonacci sequence. So this is a form of code. And this code is a language that programmers or developers, if they understand it, they'll be able to realize what's taking place. If not, implement change where they feel it suffice. And change can be the difference, meaning subtraction. It doesn't necessarily have to be exclusive to addition. Why is this important? I came here to do my stock class. But what I like to do is make sure I can substantiate why I use what I use and why I do what I do. So here we see this article about the brain and how it uses the Lucas sequence to develop. It says Fibonacci is the pattern that the human brain develops in using 9 months as the first unit. So the patterns is 1 times 9 months, 1 times 9 months, 2 times 9 months, 3 times 9 months, 5 times 9 months. So what you see is 1 plus 1 is 2, 2 plus 1 is 3, 3 plus 2 is 5. So what they're saying is the brain follows a Lucas sequence as far as development is concerned. And this Lucas sequence is in conformity with the Fibonacci sequence. The brain is. This is supposed to be stock class, polite. It definitely is. But you got to get into the heart of it all. Otherwise, stuff becomes a mystery. If you understand what you're dealing with, you'll be able to execute trades better. Because now you have confidence from your conviction that was established from substantiated facts, points, the relevancy of these ideas. You understand? We get dramatic brain transitions at birth, 9 months from conception, 9 months after birth, which is actually 18 months from conception, 27 months old, 1.5 years old, 8.25, 14.25, 24, 39.75, 65.25, and 106.5. The most folks are most familiar with are the ones around 24 years when the teenage brain turns into an adult brain for real C's, and the midlife crisis that happens right around age 40. Though the 65 years change is our official retirement age, and those who know about childcare and education are very familiar with the 18 months, which is 9 months from birth transition. And 4 years is when we start thinking logically and can really get into complex things like reading and writing and math and such in preschool, while 8 is the age when the kids start to be pretty independent from parents. And high schools is where we put teens who are kicking into that really larger society stage of 14 years old as well. So even without knowing these age transitions, we naturally set up systems that work with them. And here I'm showing you, even the fetus follows this Fibonacci spiral, the golden mean ratio. And even the universe is in a spiral. And that kinky hair, or that nappy hair, as they would like to suggest you have, follows the golden mean ratio. And the sacred number 9, which represents completion to many, represents this golden mean ratio. So why are we bringing this up? Well, last week, I spoke to you about the Fibonacci retracement. I talked to you about support and resistance lines. Okay, when we use Fibonacci retracements, we see support and resistance lines. Once we pull it out, we see mapping predicated upon impulse moves and price. We understand how can we anticipate a retracement in contrast to a reversal. It's a series of 6 horizontal lines that are drawn intersecting the trend line at the Fibonacci levels of 0.0%, 23.6%, some don't count to 0.0, 38.2%, 50%, 61.8%, 76.4%, and 100%. The market will generally retrace at the support and resistance levels of the Fibonacci retracement before the next impulse or reversal. So we could go to the previous class and we can review that. But I just wanted to compound interest because this was my introduction into Fibonacci last week. Now let's bring it back full cipher. Fibonacci psychology. So why is this all important? If the brain somehow, if our brain, if the galaxy, if the gestational period of the child in the fetal position alludes to this recurring theme, this geometry, this sacred geometry called the Fibonacci sequence, the golden mean ratio. If the daisies, the roses, the bees, all have this embedded in their creation, and then we even see it in the brain, perhaps even the way we think and respond to adversity, whatever that may be. Because adversity can be happiness or it can be sadness. If we're responding to each other and things while maintaining the integrity of the Fibonacci sequence, the golden mean ratio, then it stands to reason. It would make a whole lot of sense to not intertwine, but to accept that it is embedded into our psychology, and therefore we'll be able to pinpoint behaviors based on the same science so we can execute trades. So again, people say, yo, how you know when to do this? How you knew to get out? We watching you do it live. You just posted. It's mathematics. Because what are we dealing with? We're dealing with common sense, current events, and calculation. My common sense leads me to current events that I wind up being interested in, that in turn, I have to make a determination. I have to definitively conclude if I want to invest my money in that thing. Now I have to calculate. Common sense brought me there. This would make sense because. But I have to rationalize. I can't just be impulsively doing things just because it feels like it's the right thing. But common sense brought me there. And I pay attention to current events. Hey, they talking about that thing that I was feeling good about. Let me do a little more research now and see if I could corroborate the testimony of this sensation that we call feel. And that's where the calculation takes place. So we're going to see the golden mean ratio in the galaxy, in the womb, in the brain. And we're going to think a whole market that is driven by either one of the two extremes, greed or fear. Greed or fear. How can you look at A market driven by a bunch of minds as a collective. Everybody's in this market, all wanting the same thing. There's two of them feeling different ways, the buyers and the sellers. And they're driven by the greed of, yo, I can make this money. It's going down. I gotta get out of here. Damn, I should have stayed. Next time I will. That thinking has to be mathematical as a collective. Most people, though they think they're different, are vibrating on the same frequency because we're focusing on the same thing. So when people are focused on the same thing, I just got up 9:30 a.m. Got to get it in. Yo, the market closes at 4. Yo, I got my money in, I'm paying attention. We're more in tune with each other than we think we are. So there has to be a formula that can be devised or is already devised that we can make subscriptions to give us insight and the ability to forecast what will happen. That's all the indicators are about, tapping into the psychology of people. It's not just lines and numbers, X and Y axis. It's not just that. It's math. And so long as we're dealing with math, we ain't got to worry about nothing because we know our decision making is calculated. And so long as our decision making is calculated, we'll be all right. We can live with anything that takes place at that particular point in time. Especially if we're one of few that goes in void of emotion. If you just deal with the calculation and don't deal with the emotion. If you're not ruled by emotion, you get to see things slower. When you're ruled by emotion, everything's going fast. Greed, fear. No, you just make this your video game. You find out how to apply the strategy and you put the strategy to work. And that's it. You put the strategy to work and you mind your business from there. So here, we're looking at wins. And I use the Fibonacci retracement indicator. Well, I stipulate that the Fibonacci retracement indicator is special because it makes subscriptions to the very design of the universe. It's Fibonacci. My favorite tools to use is the Fibonacci. Because I know the basis to which this tool is here. It doesn't start off with speculation. It starts off with mathematics. I'll say it again. It doesn't start off with speculation. It has this inception in mathematics. Mathematics was employed to plot the points. This is not a hunch. And if mathematics was employed to plot the hunch, I'm going to take it into consideration. Now, I'm going to tell you, a lot of people ain't that crazy over the Fibonacci time zone. That's where these vertical lines are going up and down. This is the Fibonacci time zone. They like, it's all right, but I like things going, horizontal, because that's how they like to read. But you see, our ancestors read up and down as well, and from right to left as well. So we got to get into language again. The English language has you failing to understand that this is a language, yet you're reading it as if it is in all the wrong directions. You only got a linear approach towards how you look at things, left to right. And you got to understand, the left side of your brain deals with math, science, language, and reading. The right side of your brain deals with math, deals with music, deals with emotion, deals with art. So when someone says no words can express what I feel, is because they're lacking the ability to make the connection between the left side and the right side, because the left side deals with words and the right side deals with emotion. So if no words can express how you feel, it's because you haven't made a connection between the left cerebral hemisphere and the right cerebral hemisphere. I love the Fibonacci time zone. It follows the golden mean ratio, and then it sets up this design. So because it's following the golden mean ratio, the first set of markers are very close to each other. They may not be as significant to you as the ones that come out in front, that tend to land on points of significant interest in or around immediately that candle all creates zones. But we just got to learn how to read vertically too, instead of horizontally. And we do want to read from right to left, because the whole purpose of setting up these zones from the key low or the key high, the lower low or the higher high, whatever your interest is, the whole focal point of doing that is so you can read from right to left. So you can forecast what's going on over here, what's going on over here, what's going on over here before it even happens. That's what we want to know. But we'll never use it by itself. People use one Fibonacci and move on with something else. I use Fibonacci on Fibonacci. I got to have at least 2 Fibonacci indicators working while I do what I do. And then I want my support and resistance lines to talk to me, but I can get my support and resistance lines from the Fibonacci retracement. And then when I see they hit that axis, when that X and Y, boom, intersect, now I'm looking at a Cartesian plane. And from those perpendiculars, I'm able to quantify for what's going to take place. That's a whole nother conversation. I was going to do that stuff today. I said, I don't want to freak nobody out. So watch this. This is wins. I put it at the highest. And then all we're doing is looking at zones. It's going to let us know where major events may take place. Look, this is a major event. This is a peak. Look, the line is right on here. It hit it right on the zone. Right on the zone. Okay? This is another peak right here. Look, it hit at another peak right here. So it's giving us insight on where the potential zones may be and how long the moments may be before a new moment. How long we going to stay in a certain moment? See? How long we going to stay in this moment before a new moment happens? Think about that. These different moments. You literally see a different energy in each one of these. You just got to read vertically too. These are different moments. We're capturing moments. And then we'll get an idea of how long the new moment exists. See, how long will the new moment exist? Oh, new moment. Look at this. This was longer. This is shorter. This is longer. But yet the moments seem to ride the wave of the zones, and then they transition again. And then we happen to find the peaks at those moments, peaks at those moments, peaks at those moments. If this did not happen yet, these lines are still here. I'll say it again. If none of this happens, these lines are still here. I say that this is a heck of a forecast. Would you say that? Think about it. If these candlesticks are not here because we're actively trading, these lines are actually here. Think about that. It's really giving us some insight. Just got to take your time and wrap your mind around it. Got to learn how to read all over again. You got to look at this like a language. What is it telling me? It's telling me, okay, something will change, and when it changes, it'll go on for about this long, for another change, for another change, for another change, for another change. And at the beginning of the zone, you'll see a significant change. It can give you optimism or make you very pessimistic, but nonetheless, it'll be significant. That's all it's telling us. And if you got other indicators working, like your common sense and your current events, because as much as that sounds miscellaneous, it is my conception that is still part of the thinking algorithm of the collective. The conscious network is always mathematically evolving the same exact way. Whether it's a riot every X amount of years, police brutality being commercially showcased every 3-4 months, some stuff calculated, and others we just can't help. It's the sequence. It's the psychology. Very few of us can step outside. We're still part of it, because even those that step outside are still part of a calculation. But make sure you're part of that group. So the Fibonacci time zone is in conformity with the sequence. I want you guys to get into that. Fibonacci time zone. The time zone follows the sequence. However, you may want to chart after 21 at about 55, 89, 144, something like that. It represents future time periods, as in high, lows, or reversals. It can detect the pullbacks. We never use it by itself, much like other indicators. Best used with other Fibonacci retracement, and definitely with the parabolic S.A.R. What the heck is the parabolic S.A.R? A parabolic line, an arc. See, I ain't do all of that. You'll see it in the book, though. You'll see it in the book. We got to go into that. You got to do the math. I'm teach you how to buy $1 with a few pennies. But we got to go back to math class. There's no way around it, people. It's going to be dope, though. It's going to be fun. I think in years to come, people may give me some credit. I'm overdue an interview for how much money I make doing this. I mean, literally, I get on the market and it's a language. And I'm like, them damn charts is talking again, telling everybody their business. Oh, everyone's illiterate. He's watching this bozo's YouTube video who doesn't even show you he's using this information to make him money himself. Okay. If that's what we're doing. Best used with other Fibonacci retracement, and definitely with the parabolic S.A.R. Support and time zone confluence is a prime execution strategy. You remember confluence? When we want to make sure several things are saying yes, yes, do it, trade, yeah, go for it. So the time zone is best used when it's supported by confluence. This is a prime execution strategy. So let's bring everything back full surface. Because I'm sure you forgot about the homies over there, the 3 blocks going down, downtrend, the hammer candle, reversal, inverse hammer candle. Remember that? I know we went into a lot of stuff. Watch this. Watch how we bring it all back. So this is how the parabolic S.A.R. looks. Okay? This is how the parabolic S.A.R. looks. And when we see it go above, we know to go short, which means we're not going to stay there for a long time. Sell quick, get up out of it. When we see it go under the price action, it's intimating that we're going to have momentum in that direction for quite some time, possibly an uptrend. So you want to stick around for a while, hold your position. So that's called going long. So we go short when it's above the price action, and we go long when it's under. So this is similar to what? The exponential moving average. Similar strategy, okay? So this is the parabolic curve. A lot of people don't like to deal with these ones, in particular, the Fibonacci sequence and the parabolic curve. You know, they tell you indicators ain't all that good, and then when the volume increases, then it can be compromised and that, yeah. That's for them other things that's not rooted in mathematics. When you start talking about parabolic curves and Fibonacci sequences, retracements, time zones, I'm not telling you it's infallible. I'm telling you the human is going to make the error at that point. Because the math is just telling you the truth. How the hell are you going to say an indicator's off? It's telling you the truth. Something that the humans are doing is doing something else. The numbers ain't got no stake in this. The numbers ain't invested in a lot. They just there to report. Communication. We just getting reports. All they do is dry snitch all day. Yeah, he did it. She did it. Yo, son, I'm wearing the no snitch shirt. Yo, I don't know nothing about that. The parabolic curve, parabolic S.A.R.S just be like, listen, you want to know? I'm here to tell you. You don't want to hear it? Close your damn ears. You got nothing good to say? Don't say it at all. Parabolic curve is like, just close your ears. So, parabolic S.A.R.S. S.A.R.S, that word again. But this time it's not severe acute respiratory syndrome. It's not in terms of new covenant, self-administering reparations. This time around it's stop and reverse. Stop and reverse. That's what parabolic S.A.R.S means. It means hold on, because it might reverse. Hold on, there's a new trend. That's what parabolic S.A.R.S means. See? So when you see those curves, boom, we changing. Boom, oh, we changing. Oh, we changing. Oh, we over here, we going down. That's what a parabolic curve is. And then after a while, you read the language a certain way. You know how deep or how much momentum is going in the opposite direction. But let's go back. So it gives us insight. The parabolic S.A.R.S, the parabolic stop and reverse indicator gives us insight on whether we would like to go short or long. It helps us to forecast price action. The dots above price suggest we should go short. The dots below say go long. And by go short, we mean sell early. And by go long, we mean hold the position for a longer duration. Watch this. Watch this. Confluence trading. Remember, confluence is we want everything to agree with what we're doing here. That's what confluence trading is. We want to make sure everything agrees with what we're doing. Correct? So, right now, we're in GNUS. They've been pretty lit these days. You know, I like to give you current events. I take this right out, what's going on during the week. When you study these charts and you talk to anybody, you'll know if people BSing or not. Because if they can't teach you that information with real charts, it cracks me up every time. People send me this video. Yo, you see what this guy talking about on YouTube? This looks pretty cool. Where's his relevant charts? This video came out last week. Let's see him actually read the chart. I want to make sure he ain't just reciting, because I already disagree with what he's talking about. Show me something. Let me know you can actually read. Don't tell me you fluent in the language, and then when I start speaking to you, you ain't saying much. Don't tell me you fluent in the language, and then when you start speaking, all you know how to do is say hi and bye. I mean, shit, I could be like, yo quiero es contigo toda mi vida. I can say bienvenido a la tienda. I don't speak no Spanish. I can say cuanto cuesta, de que tamaño. I can do all that. What does that mean? I say, que te gusta, baby? And I don't consider that to be fluent, because the way I go fluent in languages, I'm next level. ¿Cuántos años tienes? Yo tengo. Hey, no, listen. People, once you understand this is a language, you'll be able to tell who's fluent. Once you understand this is a language, you'll be saying to yourself, if I sound fluent to that person, then they ass is illiterate. Because I know I just started. How come I know more and I can articulate this better? Yeah, knowledge should give you that type of ego and pride. It's not that we use it to speak condescending to other people, but we certainly don't want our time wasted. So this is GNUS. I love this, because now we got two things going on. We got the time zone going on. Oh, this is a different one. Because remember, the other one was wins. So now we got the time zone going on. We plotted a point, and now look what happens. Boom, point of significance. Look, right around a pivot. Boom. And maybe that's a coincidence. Look at this. Boom. Right here at the peak right here. But look, this is at a peak. And look what else happens. The parabolic S.A.R. Stop and reverse told us, okay, I know you got momentum, fam, but you need to change direction. You need to sell. And when we see this, it means go short. It means get up out of there. And if we would have listened, because this says something different is going to happen in this zone than what happened in this zone. And we see this zone looks different. This zone looks different. And this zone looks different. The curves are coming. The zone is telling us what it is. We got confluence here. We actually got confluence here. But if that ain't enough, watch this. Watch this. Wow. Did I really do that? Guess what I just did? Remember that trend I was talking about? Remember that downtrend where you're looking for 1, 2, 3. When you're looking for the downtrend and then you see the hammer, well, I'm still on GNUS. Watch this. I'm still here. I just zoomed in. Well, what are we looking for? What are we looking for? It's a very good question. Uh-oh. Uh-oh. We're right over here. Look in the zone. So we got a zone right here. Look at the zone. Boom. We got a zone right here. Okay, now that we got this zone, now what? This was a zone. So now we got this zone. This was one zone. So that's one. It's of significance. And then guess what? The parabolic curve says what? It's time to go in another direction. Stop and reverse. But look at this. The downtrend told us when we see these candles going downward and we see a hammer, look at this hammer. Look at this hammer. Look at these. Oh, whoa. Didn't we do this earlier? Oh, it's going down. It's going down. Hammer time. It says stop, reverse. Watch this. Watch this. It says stop, reverse. Well, look at this. We got the zone. So the zone says something different is going to happen. The parabolic curve says we're going to go in another direction. The hammer says it is time for a reversal. This is called confluence. We use the tools I taught you before and the tools we're using now. And if I wanted to OD, let's OD. Wow, we're going to use the exponential moving average. Watch this. So now we're confluence trading at the highest level. As you can see, Exhibit A. We're confluence trading. What did we learn about the earnest moving average some weeks ago? Oh, if this earnest moving average line cuts through the candlestick, what happens? You're going to go in another direction. So we got the earnest moving, we got the exponential moving average cutting through the candle right here. It's cutting through the candle, which suggests to us, oh, we're going to change direction soon. We got the parabolic S.A.R. telling us stop and reverse. We're going to go in another direction right now. And we got the 3 candles going down here, 4 candles going down. We got momentum telling us, hold on, when you see a candle after this momentum, it's going to be a reversal. So we got all these different things saying, yes, it's going to happen. Yes, it's going to happen. Yes, it's going to happen. So if I'm actively trading right now, whether I'm swing trading or I'm day trading, I done got told yes too many times to say no. Now I know, okay, I got so many yeses. When I get this much yes, I'm going to put racks on it. when I still feel a way about it. You see, I don't want to be feeling, but I just think this is going to work out. But 3 things are telling me yes, 2 things are telling me no, or is not sure. I put less money in there. And then I change my self-stop construct because it's kind of shaky. But when I got everybody saying yes, 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 you got everything saying yes, put that damn money in there and make your self-stop limit loss have more space. So if you was going to give it space of 20 cents, give it space of 35, 40 cents, depending on what the ratio to $1 is and the stock. Because it might be a stock trading at dollars at a time. So if instead of $5, if that's your intestinal strength, go down maybe 10, 11 on your self-stop limit loss. Because you got so much yes being told, give it an opportunity to go down and bounce back up. Because everything is saying it's going to go in another direction. And it's doing it different ways. And this is how you trade on confluence. This is exactly how you trade on confluence. No ifs, ands, or buts. This is exactly how you trade on confluence. This is actually beautiful. And if we want to go deeper, we could turn around, okay, now we could bring in the Fibonacci, retracement, and see what the resistance and support levels are. I broke it up like this because what you're going to see even on the tutorial, I open up different windows. And the reason why I open up different windows is so it don't be too convoluted and we see everything all over the place. You don't got to feel like that. Some people feel like, yo, I just got to keep it all on one page. No, you can keep it clean. You can use 2 or 3 indicators on one page, another 2 or 3 on the other. You can open them. You can find out what point you're talking about. That's what them time zones is there for too. What area am I in? You got a y-axis and an x-axis. You ain't going to lose where you at. You know how to read properly. And look what happens. Look at it. This is sweet. Exponential moving average. 20-day joint. It's powerful. Super powerful. Look at that. I love this. I love this. I love it. That was exciting. So you definitely want to get Headed Crown Sovereign Bible, especially those that's interested in New Covenant, asking for even more questions about New Covenant, even though you join. I understand totally, even though we got the About Us there and amenities for the group. I understand all of that totally. So here you go. And oh yeah, this Monday, so long as you have your number up in here, you're going to get that text so we can get it in on the stock market on Monday. We're going to have some fun. So let's do that. We got Blood is Thickening Water, People Lie, but DNA Doesn't, Ag Nation, and the American Terra Firma. Looking forward to that. This is for the UCC and real estate class. You definitely want to get that for the UCC and real estate class. Priority book. We're going deep in the paint. We definitely using the books for the course. We went crazy on that first class. And of course, this book was released yesterday. Give it time to come in the mail. Good brothers and sisters, because it was available on pre-order. So give it time to come in the mail. I taught them how to buy $1 with a few pennies. Looking forward to it. Let's get it in. I'm proud of this work. Man, this work is, it's amazing. Go to brotherpolite.com and you good. I thank you all for listening. I'll see you, as always, next weekend. I'll see you on Saturday for the UCC and real estate course, and I'll see you on Sunday for this stock course. Let's make it happen. Check out that tutorial.